Tag TV and Tag Radio. Be seen and heard by both technology users and technology producers throughout the state of Georgia and around the world. Low cost, big benefits, powerhouse online branded video and audio has arrived. Tag TV, Tag Radio, there's a lot more to know. Be it a bank, non-banks, or digital economy vendors, new payment methods are exploding, expanding payment options and disrupting ecosystems that have been mostly the same standards and processes for generations. In a transitional, ever-expanding, and fiercely competitive global marketplace, new and old economy financial institutions must deal with growing, ever more complex and risk decisions. And, to be quite frank, the stakes have never been higher. Greetings, everyone. It's Friday, December 20th, 2013, and this is Tech Talk with Technology Association of Georgia President Tino Mantella. I'm your guest host, Frank Baia. Up to the Tech Talk, the challenges and opportunities facing today's and tomorrow's payments industry. Hear the insights of a managing director in KPMG's banking and financial institutions practice, Bob Ruark. Bob has been directly responsible for strategic development and execution, technology and platform improvement, product development and management operations, as well as operations management, regulatory risk management, and sales strategy and execution. He is experienced across credit card processing, e-commerce, prepaid cards, consumer banking, commercial cards, government cards, and treasury services, all as a result of having substantial experience leading the payments business for the past 20 years at Bank of America. What is causing all the buzz about Atlanta being a major hub for fintech and payments companies? Is the industry ready for a new global standard for interoperations of credit cards, terminals, ATMs, and debit card transactions? From the rising concept known as faster payments to the increasing regulatory scrutiny in the payments industry, if you are into fintech or deal with payments as a retailer, bank, non-bank, or vendor, or looking to succeed, even survive in any business in the future of the digital economy, this Tech Talk, is due on receipt as we go inside the industry and beyond what's next in payments with KPMG's Managing Director, Banking and Financial Institutions Practice, Bob Ruark. This edition of Tech Talk is brought to you by GlobalSpeak.com, new media consultants, corporate video and audio communications, video and audio production and distribution, live and virtual event production. Tag TV and Tag Radio is a service of GlobalSpeak.com, creatively delivering powerful marketing, video, and audio solutions. Bob, welcome to Tech Talk.
Good afternoon. Great to be here.
Well, at a recent FinTech conference, it was actually entitled here in Atlanta, Epic Center 2013. A lot of comments were talked about. 2/3 of the payment card transactions pass through Georgia's FinTech organizations. Certainly there's a lot of buzz and energy being generated about that subject. Maybe go into some granular insights about Atlanta being a major hub and into the current trends that we're seeing that are driving the surge of growth and interest.
I'd be happy to. First, I love to come to Atlanta, and I come here very often to meet with clients. It's a great fintech community. Just the number and diversity of firms, as well as just some major firms. You know, to your point, there are probably 3 firms in Atlanta that control a majority of debit and credit card traffic across the United States, and that's just amazing to think about. You know, there are a number of micro and macro trends, both of which are creating a lot of buzz these days in the fintech space and in the payment space. On the macro side, we continue to see growth in both credit and debit cards. Even with the Durbin Amendment, debit card growth continues. And card growth continues to outpace general payment growth. So cards continue to take share from check and from cash. And while some alternative payment types are growing faster than cards is still the dominant volume of payment activity that's going on today. I think the other trend that we're seeing is, you know, and there's a lot of talk about mobile technology today, but I don't want to focus on mobile payments per se. I think the real trend and the real interest is in mobile and proximity-based rewards and different offers. I think both big banks and smaller technology startups are seeing the value in bringing rewards or loyalty offers right to consumers when they want them most and when they can take advantage of them. this is being accomplished through really some massive and smart usage of very large data streams and integrating that into phone technologies as well as payment and other device technology. And I really think that's where consumers are seeing a lot of value in mobile technology, much more than on the payment side of the equation.
There's a lot of conversation about the digital economy, predictive analytics, the situation as it relates to keeping not only track of the information as an individual customer or business progresses through their day-to-day activities, but also, as you're mentioning, to provide, I'm guessing, gamification-type incentive services that would make special offers and those kind of benefits. I guess if I'm not in the space, if I'm not committed to the vertical, I'm just a general small business, a medium to size enterprise, why should I care about the whole movement towards the change in technology payments as far as that goes?
You know, it's a great question, because I think when you sit back and look at it and read about a lot of what's going on, a lot of the focus is on the major retailers and the big box retailers, but there's really an opportunity to create an evolution for small to mid-sized retailers in particular, because today a lot of them really rely on foot traffic coming into the store, and maybe you might pick up a gift card, maybe you might see an ad in the local newspaper. What we're really talking about today with some of these new technologies is when you walk into a store, if you've been there before, the store will recognize your presence right away and may offer a discount or a loyalty purchase that would support your prior purchases or something new that the merchant is offering in a seasonal nature or something like that. And I think the other really interesting dynamic is there's technology now that links the merchant's inventory out to the broader web space, and all of a sudden, instead of being a single location retailer, yes, they still have that single physical location, but now all their goods and services may be on a website to be viewed by the general web population, and they can start receiving orders through that. So it's really an exciting time to be in the retailer space if you have an understanding of the technology or you work with strong partners in the technology and payment space.
Well, it's kind of an understatement when we talk about, I'm often perplexed in terms of old economy, new economy. We've used those terms for decades, it seems, but the reality is that so many things now they're no longer cyclical in terms of things like the workforce, say, for example, when you're talking about seasonality changes or even economic changes in terms of certain business factors. But they're more structural because of the kind of things that we're talking about here, where it isn't really just transactions anymore. It's so much more in terms of how the financial technologies are going to be, already are and will be impacting the way business is conducted, no matter what vertical you're in. Let's talk about something I find really curious, because I think it's a paradox when we talk about payments. Now we're talking about faster payments, and there's a lot of talk around faster payments. What are faster payments, and will the concept of faster payments actually take hold?
Yeah, thanks for bringing that up, because I think faster payments has become the latest buzzword in the industry, and it's really just the continued evolution of an old idea, which is just take friction and time out of the payment cycle. So another way to think about faster payments is to call them real-time payments. So how can I get a payment to move from me to you in a real-time fashion? So even in today's environment, you might feel like a payment is moving fairly quickly because you're seeing it show up on your online banking or your phone or something of that nature.
I watch those numbers change pretty quickly. It seems pretty fast to me, but go ahead.
That's right, but it really takes a couple of days, sometimes even longer, for those items to post. So the idea with real-time payments is those items move instantaneously or within minutes through the payment system. And will it take hold? I think in the U.S., the jury's still out. It has taken hold in the U.K., and it was done by a regulatory mandate. The same goes with Australia. They just strategically stated that they're going to move to a faster payments network, and they're building it out today using, in fact, one of our large fintech companies based in the Atlanta market to help them do that. And they're also seeing that happen in other countries as well. In the U.S., though, you are not going to see a a regulatory mandate to do that. It's just not the way we try and run the payment infrastructure within this country. But I think you will see continuation of innovation around this as private sector firms look for specific payment types that could benefit from faster payments. A good example might be an insurance claim when people need money very, very quickly.
Okay.
They may not want to deal with a check or even a prepaid card, but if you can move money instantaneously into their checking account, that could be extremely helpful to them.
You know, again, you live in this space, and it's something that obviously is so understandable. Let's take a second and realize that a lot of our listeners, a lot of our even technology members, may not be so engaged in your particular vertical. While you're going through the faster payment concept, on one side, why would you want to do it? And then on the other side, why would you not want to do it? What would be the reason not to have a faster payment system?
Yeah, I think the idea against the argument for faster payments would be that U.S. payment infrastructure is already pretty good, and payments move fairly fast and at least post in a memo fashion to your account, compared to, say, other countries which have much more friction in their payment infrastructure. Payments might take 4 or 5 days to post instead of 1 to 2 to 3 days to post like in the U.S. But on the other hand, you have payment infrastructure in the U.S., the ACH network, the wire transfer network, even the card networks that are aging and are very much built on the idea of batch processing. So you run your authorization of payments maybe in real time, but you batch up those payments and settle them over a day or 2 days. And there really is a push and an opportunity that as everything continues to accelerate in the economy, to get that money faster and on a more real-time basis, not only improves, say, working capital for a business, but also reduces the amount of risk that someone's taking with a payment by waiting a day or two before they get the actual funding for it.
Okay, I see. Well, would it be relevant to assume that, this is strictly a naive question, I'm sure, coming to you, but on a global basis, once we're totally interconnected, wouldn't there be a competitive advantage or disadvantage if you weren't involved in the fastest type of payment when you talk about, say, from outside the United States?
Yes, I agree 100%. There'd be a competitive advantage to be involved in it. I think that's why you're seeing some private sector payment networks and other companies in the U.S. Look at that.
Okay.
And we, in fact, helped the company with a strategy around where were their market opportunities with faster payments just this past year.
Well, you mentioned regulatory scrutiny. Go into that a little bit. It seems like it's increased the payments area. Is this true? It's
absolutely true. It's probably increased exponentially over the last few years for anyone that's involved in the payment space. And it's not just one regulator. It's multiple regulators. And the big concern is really around a couple different things. One is just sending money into restricted jurisdictions. The other is just money laundering activities where you're taking illegitimate funds and trying to launder them through the payment system. And then with the evolution of the Consumer Financial Protection Bureau, or the CFPB, they're very focused on fairness of consumer-related activities, especially involved in the banking space. And unlike most other regulators, their reach extends well beyond banking. So they can go wherever they want to go, whatever industry they want to go in, if they feel like there's anti-competitive or abusive or deceptive behavior. And we're seeing a lot of that activity extend beyond banks into the payment space. As well, I think the other interesting push this past year has been the Federal Trade Commission. So what the banking regulators don't have jurisdiction over, the FTC sometimes has jurisdiction over. And just this past year, they find a couple of independent sales organizations which actually sell credit card processing services to small businesses, and they find them over deceptive and unfair sales practices with their merchant base, and also put a cease and desist order on them for certain types of behavior that they have to now go back and remediate.
Now, we were talking earlier about a global, digital economy, certainly a global, interconnected global economy. Let's get into a little bit about some of the what they call EMV, EuroPay and MasterCard and Visa, a new global standard for interoperations of IC cards and point-of-sale terminals, but even ATMs and credit and debit card transactions across the board. We know this is coming to merchants soon. Do you think the industry is really ready for it?
I really don't. I wish it was, but I'd have to say it's probably not. EMV, the concept of EMV is that there's a microchip embedded in your traditional payment card, and the combination of that microchip, your card, and potentially a PIN that you enter makes the transaction significantly more secure than a standard card swipe transaction. And that's proven to be true across Europe and in Canada, which is one reason why we're rolling it out in the U.S. But the rollout date is 2015, which really isn't that far away in terms of if you think about the hundreds of thousands of credit card terminals or cash registers out there that would have to be retrofitted to support that. And I think the other challenge is, if you look at some other card association adherence that was pushed a couple of years ago, or really 7 or 8 years ago now, around PCI compliance, which was to limit the propensity for breaches of credit card data, we're still trying to get small businesses compliant with the PCI requirements that have been set out by Visa and MasterCard. So I'm not necessarily hopeful around EMV adoption. On the other hand, I would say that the industry is not sitting still. I know Visa and MasterCard both are supporting new end-to-end encryption standards that would go a long way to help make transactions more secure as well.
Now, certainly everybody's familiar with KPMG without any question, but they may not be familiar in depth with the kind of things that you're involved in, especially in the payment space. Take a second and tell us a little bit about what does the company do in the payment space specifically?
Sure, I appreciate asking. Well, banking and payments and financial services is the largest practice at KPMG, and we have an extensive management consulting and risk consulting practice that focuses not only across banking but also fintech and the broader payment space. We have clients with revenue generation, revenue growth ideas, client segmentation, analyses and strategies, as well as broader operational and technology initiatives. Our risk practice, we've talked a lot about risk today, really helps with operational risk identification and remediation, as well as identifying and remediating some of the regulatory risks we spoke of. Finally, we support really the entire industry with M&A advice and financial and business due diligence. And we do that on just the advisory side of our business, which is what I'm part of. Most people probably know KPMG for their core tax consulting practices and audit practice.
Well, I would think it kind of segues back into what we were talking about earlier, that fintech is not what it appears to be anymore. Payment transactions, when you're thinking of predictive analytics and now faster payments and the whole digital economy, it's kind of a convergence both inside the boardroom and outside the boardroom as it relates to strategy, I'm going to guess. Well, we caught you at an airport. I know you're heading out. Hopefully you're heading not north and into the storms, but maybe even south, but I'll ask that at another opportunity. Let's just say that thank you for taking a moment out of your hectic schedule to give us some really keen insights into the future of what's happening in fintech. Bob, thank you for taking time and joining us today on Tech Talk.
My pleasure. Thank you.